two titans of innovation, one built on academic research and the other on speed. Cardano's tech promised to be slow and rigorous, while Hedera's enterprise-grade scalability was the first of its kind. But in today's market, patience doesn't always pay off, and speed alone doesn't guarantee adoption. So which one truly holds the edge as we head deeper into this cycle? Stick around, because this battle might just decide where the next wave of capital flows. You're now entering the crux of crypto. Hey guys, Crux here. Welcome to the ultimate pit stop for Web3 wisdom. Smash that like for Pup Tugs, who just said wake him up when we talk about real projects, like Dog with Hat. We've got two massive projects to dive into, so let's go ahead and get started. First up, adoption. Cardano clearly has the edge here, with the market cap nearly 3 times larger. But here's the real reason they're both going head to head. They sit in that second tier of large caps, sitting under giants like XRP and Solana. So the question becomes,
Your question?
Ask the question.
if only one of these two can break into the crypto elite, which one is it? Let's start with the US Crypto Strategic Reserve, where Cardano is actually listed as just one of 5 recognized currencies. Now for quick clarification, the funds in the US Crypto Reserve are not taxpayer dollars at work. They come strictly from assets seized in illicit activity, so there's no government pump happening here. On the policy front, Senator Cynthia Lummis is pushing the Bitcoin Act of 2025, diversifying out of gold to acquire 1 million Bitcoin in 5 years. Moves like this drive adoption forward. And with regulation finally taking shape, Charles Hoskinson has been one of the loudest voices in the space pushing for clarity, testifying before Congress, joining hearings, and breaking it all down in long-form content. On the other hand, Lehman Baird is taking a quieter path, embedding compliance into Hedera's governance model from day one, instead of lobbying in the spotlight. The reason I bring up Bitcoin regulation is simple. Cardano has been out front shaping policy in the United States, while also working on bridges to unlock Bitcoin's liquidity. See, Bitcoin's scripting is limited on purpose, but Cardano could step in and become the programmable settlement layer, letting Bitcoin holders put their Bitcoin to work in DeFi, staking, lending, NFTs, and real-world assets, the whole package, without ever sacrificing Bitcoin's base layer security. But here's the catch. Cardano has been bottlenecked by stablecoin liquidity. Without native USDT and USDC, since Cardano's non-EVM compatible, adoption has been stagnant. Remember, Cardano took a security-first approach, which means slower integrations, but a stronger foundation. This is where RLUSD comes in. Ripple stablecoin pitched as a way to ease that liquidity crunch. Now, don't get ahead of yourself. Both Ripple and IOG are still in the talks, and nothing is set in stone. And with RLUSD only the 14th largest stablecoin currently, Ripple has a long way to go before it can seriously position itself as a liquidity layer for other ecosystems. Charles has been adamant that Bitcoin is the future, and even called for a $250,000 Bitcoin price by the end of next year.
You don't think we're heading towards another crypto winter at all?
No. I think Bitcoin will be over 250,000 by the end of this year or next year.
What's going to drive that, you think?
What'll happen is that the tariff stuff will be a dud, and that people will realize that the world is willing to negotiate. And it's really just U.S. versus China, and a lot of people will side with us, some people will side with China. The markets will stabilize a little bit, and they'll get used to the new normal. And then the Fed will lower interest rates, and then you'll have a lot of fast, cheap money, and then it'll pour into crypto because it'll get reignited by the market structure bill and the Magnificent Seven entering in the stablecoin bill. So it'll stall for probably the next 3 to 5 months, and then you'll have a huge wave of speculative interest come probably August or September into the markets, and that'll carry through for probably another 6 to 12 months.
So, what do you think? Do you agree with Charles on this massive price target? And how about his bold claim that there won't be another bear winter? I want to hear your thoughts. Drop your take in the comments below. Hedera made a big move with Circle to bring USDC on-chain, but don't expect USDT. Tether thrives on retail adoption and exchange liquidity, while Hedera is all about enterprise partnerships. That's why Circle is one of the few publicly traded crypto-native firms. It is such a natural fit. Hedera itself is run by a council stacked with Fortune 500 companies. Think Google, IBM, LG, but this enterprise-first strategy comes with trade-offs. Even though Hedera supports EVM smart contracts, it still struggles to build meaningful TVL. And that really isn't a surprise. Hedera itself isn't just trying to become another DeFi chain. Instead, it is focused on real-world enterprise use cases, setting itself apart with a governance model designed around security, compliance, and decentralization. The Hedera Council is composed of 31 global organizations, each with equal voting rights. Members rotate their seats to ensure fresh perspectives, and also help run nodes to ensure network security. This setup blends decentralization with credibility, giving Hedera a governance model unlike anything else in crypto. Cardano, on the other hand, takes a completely different route. Its governance is rooted in community participation through Voltaire, where ADA holders can vote directly on proposals. Instead of a council or corporations, Cardano leans on its stake pool operators and its treasury to form upgrades. It is a bottom-up model that emphasizes decentralization, contrasting Hedera's top-down enterprise-first approach. Both models have their pros and their cons. But here's the question. Do you trust giants like Google to secure the chain, or should it be left in the hands of you and me? I'm curious to hear your take. Now, you guys already know I'm bullish on both of these projects, but with Glacier making waves as the biggest airdrop in crypto history, it's easy to see why ADA's back in the spotlight. If you were one of nearly 34 million wallets across 8 major blockchains with $100 in self-custody during the snapshot, you're officially part of the Glacier airdrop crew. I've linked a video below walking you step by step how you can claim your free Midnight tokens if you're eligible. Think of Midnight as Cardano's private vault, locking down security, enabling selective data sharing, which is highly attractive for enterprise and regulated industries. Think about it. Cardano runs on Haskell, the same programming language NASA uses when failure is not an option. But here's the twist. NASA also leverages Hedera's network and raises the bar with future integrations like Google and even NVIDIA. Enter Equity Labs, the engine turning Hedera's NVIDIA partnership into reality, bringing AI on-chain. Pairing with NVIDIA's Blackwell architecture, Equity's verifiable compute delivers a staggering 400,000x performance boost, while ensuring cryptographic trust before any AI agent even executes. As if that wasn't enough, Accenture just stepped in, bringing its deep ties with Fortune 500 companies to the table. So, with NVIDIA, Accenture, and NASA now in the mix, how long before the biggest money finally piles in? Well, ETF News might give us an answer.
There are filings out there from multiple issuers for XRP ETFs, Solana ETFs, Cardano, HBAR. We could go on down the list, but there are a boatload of filings out there. And the expectation is that this standardized crypto framework will be implemented, say, in the next 2 months or so.
Both Cardano and Hedera are set to be featured in the next wave of exchange-traded funds. Both are rocking a 90% chance of approval. And let's be real, when Grayscale makes a move, they almost always seal the deal. If Cardano ever plans on flipping Ethereum, these are the type of power plays it needs.
Give me a prediction, whether it's Bitcoin DeFi or partner chain, something a little specific on what we will see 1 year from now.
Well, first we'll be, sad that Vitalik retired after Cardano flipped it.
Now, real quick, if you're vibing with this analysis, tap that like and make sure to subscribe, because this is just one of many battles we're breaking down on this channel. Of course, no showdown is complete without mentioning decentralization, the third pillar of the blockchain trilemma. The Nakamoto coefficient is the scorecard here, measuring how many entities would need to collude to take control of the network. In this round, Cardano takes the edge in decentralization, leaning heavily in a community-driven model rather than enterprise control. But it's worth noting, HBAR has its strengths, particularly in areas like equity tokenization, where enterprise guidance often works better than leaving it up to the crowd. Now, before we break down who takes the dub, catch plays early that could one day be the biggest names in crypto with the gem hunters. I just dropped a deep dive on a gem I've been tracking since mid-2024. Take your best guess, and if one of you gets it, I'll confirm it in the comments. We've got 3 memberships, each one giving you daily live Q&As for real-time answers. Check out the Gem watch list, where tomorrow's winners show up today. Our VIP trading group has over 450 traders still locking in gains even when the markets dip. Our academy has been setting people up for success. Your crash course in mastering research, trading, and even one-on-one portfolio audits. I've already helped out over 170 members, walking them through how I exactly approach the markets, what I would look for in their shoes, and how I'd personally manage the risk. It's not financial advice, just the exact playbook I personally use to win in these markets. More details in the description below. All right, let's get back to the battle. All right, the moment you've been waiting for. The final verdict. Between these two American-built powerhouses, my pick is Cardano, and here's why. Midnight gives Cardano a fortress-like security layer, and its academic rigor, backed by Haskell code, gives it the clear edge. On top of that, decentralization is where Cardano shines, putting real power in the hands of the people, with native token distribution that outpaces every other proof-of-stake network. That said, when it comes to scalability, Hedera takes the edge. Because at its core, a hash graph is a form of a DAG, which is simply more efficient than a blockchain. Now, I can dive deep into Mithril and Hydra, which play massive roles in how Cardano scales. So this one is arguable, but don't sleep on HBAR. It is the dark horse of crypto, gunning for a top 15 slot. And what makes this battle even more interesting is a strong bond between the Cardano community and the HBARbarians, a connection that's now set through the DREC Alliance. So, do you agree with my assessment of these large caps? Drop your comments below. Don't just watch from the sidelines. Jump in the free Discord, follow me on X, and let's win the cycle together. Catch me live on Tuesdays and Thursday at 4 p.m. Eastern Standard. And be sure to subscribe. Last week, I dropped a video on Bitcoin versus Caspa, and I think the results will surprise you. Earlier this week, I dropped my second base ecosystem video, which has 4 solid asymmetric bets to send your portfolio into overdrive. Check it out right here. And while you're at it, here's another video you don't want to miss. Click one of these to dive deeper into the crux of crypto.